following is a presentation of TFNN. Now, the author of Mastering Probability, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the June 20th terrific Thursday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that is what it's all about. So let's go look at one of our tools. This is the tool I call developing your own model. You know, success is a very personal thing. For some people, it means money. For others, it's love. And for many of us, it's just simply happiness. You know, success is something that each of us must define for ourselves. Otherwise, how will we know if we've achieved it? So question, what does success mean for you? Write that down on a piece of paper, or, you know, better yet, I like to just simply use that efficient memo pad on your mobile phone, your device, you know, maybe just even a Word document or what have you. Write these things down. You should know right now, what does success mean to you? One sentence, one word, you know, whatever it is. You know, and like all good recipes in life, there's a secret ingredient, and I believe that secret ingredient for defining a success formula is nothing more than having an open mind to alternatives, which is the same thing as learning to appreciate the other side of the debate. You know, in trading and investing is what we refer to as understanding both the bullish and the bearish position, and we're certainly going to do that this morning. The secret ingredient, folks, is listening to a variety of opinions. You certainly can do that here all day long at TFNN, or, you know, read a variety of books. In fact, we've got a number of hosts that have their own books out there. You know, do all that before you make up your mind, because no one speaker, no one talk show host, no one book, no one individual has all the answers for you. Instead, take advantage of all that's available to you. Be eager to learn, and be eager to learn no matter where you are in your journey. Take a person's knowledge, but don't take it as the only knowledge. In fact, go to the homepage at TFNN.com right now and take advantage of my special report, All That Knowledge. The trend is your friend until it changes. It's on the main page, the homepage of TFNN.com. It's over on the left-hand side. It's up under Breaking News. Take advantage of that. In fact, take advantage of the link within the special report that provides you with the opportunity to receive my daily newsletter service for the next 2 weeks. No risk, no advance deposit, no charge to your credit card. And, folks, what you'll receive is a treasure trove of information for you to be able to sift through. I provide the information, you make the decisions. That way, you develop your own model for success. And success, well, folks, it'll be yours for the taking. Let's go take a look at these markets out here. Let's go see what they're taking. Right now, we've got the Dow futures off about 126 points, trading out at 14,921. ES Mini down another 16, 17 points, trade out at 1607. NASDAQ futures off 30, traded at 29.26. Russell 2000 down 12, out at 970. How about the only safe haven in the marketplace? Where's that? Oh, you got it right. That is the U.S. dollar. King dollar up 46 ticks right now. It certainly isn't Goldilocks. Gold trading off $79, nearly 6% down this morning. Trade out at 12.95. Silver off 8%, a little over 8% right now, off $1.78. That's trading at 19.85. Light sweet crude down a couple of bucks. That's a good thing to see. That's trading at 96.10 out here. Even natural gas is down. Platinum's off $32 out here. Our calling number, you know it, 877-927-6648. Give us a call. We can take a look at your stock charts. Before we go to the charts here, let's take a look at what's going on around the world right now. You got a little meltdown, quite frankly, going on inside the FTSE in the UK. It's trading off 150 points, but it's breaking a hammer, and that is a serious thing when we take a look at the FTSE. Where that closes today will be a real big clue as to what is on the horizon out here. The DAX is off 206 points. That's down 2.5%. They're playing a little bit of catch-up to us. The Nikkei was off about 230 points last night, 1 7/10%. Hang Seng down 600 points, off almost 3%, 2.9. You had the Shanghai, that was off 2.8% as well, down $62. So where are we in the marketplace? Well, let's start off here today by taking a look at the daily charts. Let's start off by taking a look at the daily chart for the ES Mini. You know, those Gartley patterns that we were looking for in all the indexes, all the ETFs, those things came in on Tuesday. That was your opportunity to sell into some what seemed like a sign of strength out there. And what we're taking a look at here on the ES Mini, what that Gartley pattern did was it really set up the next C point of the A to B, larger A to B equals CD down. And yesterday, you came off of that C point with conviction, a wide-ranging bar. When you come off a C point with conviction, you know, quite frankly, what it spells? It spells trouble. And what it says is that your A to B equals CD down is more likely going to be more than a 1-to-1 A to B equals CD down. In the futures, if we take a look at that, the A point on this is going to be the high for May 22nd, that key reversal session out there, 1685.75. Your B point is going to be the low that came in on June the 6th. That's the low that needs to be taken out inside the indexes, inside the futures contracts, inside the ETFs out here, inside the ES Mini. That level is 1596.50. You're not there yet. Your C point is going to be the high. We'll use the high of yesterday out at 1649. 1-to-1 A to B equals CD. That takes you to 1560, and that would be a natural place. That would be a natural place for the market to maybe pause a bit out here. Now, I'm talking about a daily chart. We're not talking about the intraday pauses that we'll see inside the marketplace. Also down there is your 0.786 retracement off of the low that came in on April the 18th out here when it was at the low of 1530.75. I believe that instead of stopping there, because of how we're coming off of this how we're forming this C to D leg here with real conviction, what we're more likely to see is really a test of that April 18th low right around 1530.75. Is that it for the markets? Absolutely, positively not. Those markets are going to go much lower than that. Be careful out there. The ES Mini, the S&P futures, they are in a confirmed downtrend. Now, we've got some divergence out here, but I suspect all that divergence is going to come into alignment here in the next day or so. Let's go take a look at the Dow. Let's take a look at Dow futures. Take a look at the top line number. It also is doing the same thing. Now, it really formed its C point out here. The actual high inside the Dow futures came on June 10th out at 15,293. The high yesterday was 15,278 from the prior day, 15,274. But the reality is you can use those swing points, those tops as your C points. So we've seen an explosive move inside the Dow. It also has a confirmed downtrend. Like I say, go get that special report at the homepage at TFNN.com. Do it now while you're listening. If you haven't had a chance to do that yet. So what the Dow is now going to do, it is going to make its way down to the 14,602. That is the 0.786 retracement. That'll set up a Gartley buy, but I suspect that area will also fail, and we'll see the Dow get all the way back down into its April 22nd low. That's where it made a low at 14,394. That is the Dow futures. We'll take a look at the indexes and the ETFs during the next couple of hours out here. Now, what the Dow futures are going to do, what the Dow is going to do, it's going to get all the way back to that October 2007 swing point. Inside the future, that's the October 11th, by the way, 2007 swing point. Inside the Dow, it's 14,267. Now, getting back inside that could be a real significant event, especially if it does not break back above it anytime in the near future. So that is where things are headed inside the Dow. Now, the divergence out here in the marketplace, believe it or not, it's inside the Russell 2000 and the NASDAQ futures. Inside the Russell 2000, it is not a confirmed downtrend just yet, but it'll play catch-up. It will get there. You know, the Russell 2000 only did a 0.382 Gartley buy pattern as it was forming that low on June 6th. Right now, that's the area that it's going to be dealing with here today, tomorrow, Monday, whenever that is. That low is 961.40. Next leg down inside the Russell 2000 will be its 0.618 retracement level. You see, this was much stronger than the Dow was, than the S&P 500. I'm speaking about the Russell 2000. It did not make its way down to the 0.618 level, coming off of the low from April 18th all the way to that high on May 22nd. So that's really its next stop. So if the S&P and the Dow make their way down to the bottom of the swing point, makes sense to me that the Russell 2000 target is not just 937, but more likely 918. Now, we know we've got big volume downdraft days, for example, on the April the 15th session, and that's really what you're going to want to be paying attention to, because that high is 939.80. That could act as a support area inside the Russell 2000. Look, this is not a one-way down market. This is a market that will bounce. This will give you opportunities to get in on the short side. If you've missed it already, don't jump in on this freight train just yet. This market will bounce. Don't know that it'll be today. We'll take a look at the intraday charts later. We come back from the next break or during the break after that, and we'll see where those may give us some signals of possible, I say, some possible bounces in the marketplace. But what you really want to do this now, remember, we've come from a market where what you were rewarded for was buying the dips. The trend has changed. Trend changed in the New York Stock Exchange first, and that was the big signal out here. So now what you want to do from your thinking standpoint, this is my opinion, of course, is now what you want to train yourself to do is to sell all of the rallies. Before it was buy the dips. Now what you want to do is you want to sell all the rallies. If you're short, just wait for the next rally, add to your positions, look for new positions. But that's what you want to be doing now until we see that S&P 500 get down into the 1460-ish level. Maybe it's a little bit even lower than that, and we got a long way to go. It's going to be a hot summer, hot in this marketplace, hot to the downside. 877-927-6648. We'll be right back, folks.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Let me show you how difficult things were in the market here last night. Now, you know that the Euro-Japanese yen is the best currency pair. It has the highest correlation to the S&P 500, to the ES Mini out there. And yesterday's close here, if you're watching us on Tiger TV, maybe you're listening on the radio or your mobile device at TFNN.mobi. Remember, you can always get the live stream of the show by going to the homepage of TFNN.com. You'll see a button over on the right-hand side. Click on that. You'll see the show streaming live. Better yet, go to the Tiger's Den. You'll get to see all of our charts here in HD. You can try that out for 30 days as well. And you can always get the archive of this show on Channel 9. Now, the close yesterday, coming into the 4 o'clock close, we had the close, or the closing bar, I should say, on the Euro-Japanese yen. On the 30-minute chart was out at 128.20. Now, it had quite a move to the upside last night. Went ahead and completed, and in fact, right at about that price range was a 1.272, 0.618 Gartley sell pattern. That failed, and it went straight up to the next level. That's why you want to understand your three primary levels, your contraction levels, 0.382, which really helps us to identify a trend, the strength of a trend out there. Your normal, just simple retracement in between a set of swing points, a major intersection where you see a change in trend in the marketplace is going to be 618. More often than not, that's where you're going to see price move back to. That's where you want to make sure that you start to tighten up your stops, or maybe even ahead of time, just simply put that as your exit area. And then if that fails, you're looking at the 0.786 area. Well, here inside the Euro-Japanese yen, you can see it has great Fibonacci number, because on the expansion side, you're looking at 1.272 and 1.618. You can see the B to C swing point on here is a 1.618 expansion, as well as the retracement from the highs back here on June the 10th all the way down to the lows that were put in on June 13th. There was a nice 0.786 retracement. So yesterday, after the close, our markets began to sell off. They really started to get smoked as Asia was coming online. It wasn't at first, but right around, I'm going to guess it was maybe around 9:30, 10 o'clock, things really started to heat up out there. And you also had the Euro-Japanese yen pushing higher, but that did not do anything really to our futures out here. This is going to be the last bastion of hope for any bounce in the marketplace. Now, still an uptrend out here at the moment. If it takes out this area, says it will go do 100% move of a move, and that would take you all the way back to the June 10th swing point high at around 131.12. Can it do that? Absolutely. You know what you're looking at here on my chart are really one butterfly pattern. That was where it made it slow. That was your shorter term butterfly, and then the Gartley sell area. But there's really a larger butterfly pattern out here, and so if we go take a look at from that high And that's really the one that is totally in play out here down to the low. What you'll see is that you can easily see the Euro-Japanese yen make its way up to about 130.46. That would be the 618 retracement of the larger butterfly expansion pattern. Right now, this currency pair is still in its uptrend, so that is a possibility. If we do see a move in the markets, you can just go say thank you. That'll give you next selling opportunity, by the way. You can go say thank you, Mr. and Mrs. Euro and Mr. and Mrs. Yen out there. So look for that. Watch this currency pair, and you can easily see it making a potential move up to about 130.46. Right now it's trading out at 129.18. Now, let's get over and take a look at Goldilocks out here. Gold is trading down. Now, let's take a look at what gold has done on a couple of different time frames out here. First of all, as it has made its low, so far the low of the trading session here looks like it's about 1285. So at 1285, what we're taking a look at here on this chart here, this chart here, I'll pull it back just a bit for a moment. This chart takes a look at all of the new moon and full moon that occur out in the marketplace and how it seems to impact gold. Because not just sometimes like these new moons and full moons haven't really done much with regard to the actual stock market, but they will impact other markets out here. So we're not going to spend any time on that here today. What we are taking a look at is the mere fact that we did have gold go ahead and break the lows from April the 16th. That low, as you know, 1321.50. We were looking for that 700,000 contracts, so it's going to need to get some giddy up and go here today. Well, I guess it doesn't really need to. It's broken that low so far on lighter volume. Now, as it was making that low, as it was making right in the 1285 range, which you can see on my screen here, I'll blow this up for you, you can see a butterfly expansion pattern, a 1.272 butterfly expansion pattern. That's what has stopped gold so far. That's what you would expect. When you get these Fibonacci numbers to come together, you expect to at least see a pause. So far, that's all that we've seen. If, in fact, this area doesn't hold, it'll go make that 1.618 retracement. And we get back from this break, we're going to take a look at gold, but the 1.618 takes you down to 1219. 877-927-6648. Expect them to get out of the doors as quickly as they can as the market opens. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, the art of timing the trade charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. The art of timing the trade charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow trading up 140 points out at 14,974. S&P down 18 at 1610. Composite trading at 3404. That's off 38 points. Russell 2000 down 14 points, trading at 971. Google's off $6. Apple's off $1.81. To the upside here, well, let's see. I got mostly pro shares. Let me try to find an equity here. You've got Wright Medical Group. WMGI, that's up 7% here, so that's a positive. GameStop, GME, maybe we need to take a look at that. That's up about 4% here this morning. Red Hat is up, RHT, that's up 2% this morning. Probably not some bad stocks to look at in a big down market out there. But to the downside here, you got EBIX Inc. That's actually leading the charge. EBIX, that's trading off 45% here this morning. Looks like on Goldman Sachs agreed to terminate a merger agreement. So that thing is just getting wiped out. Google's off $6. FedEx, FDX, they were out with numbers yesterday. I think they jumped yesterday. They're trading off 370 right now. What else? Goldman Sachs off 370. Celgene off $3. Wynn Resorts off 3. Royal Gold, RGLD taking it in the shorts this morning. They're down 6%. LinkedIn off $3. Anheuser-Busch, this bud is not for you this morning. That's off $4. Gold, Randgold Resources off 3. Netflix down 3. So some damage, some carnage in the marketplace. I'm going to go back to gold here. We'll try to finish off gold. So much to really take a look at out here. We'll try to really get to everything out here for you. Now, what I've got on my screen here is the monthly chart for gold. Monthly chart for gold shows a nice 0.618 retracement coming off of the 2008 lows, and that price, folks, is down in the 730-ish range. That says 1157-ish is a definite target here for gold. So that is on the monthly chart. Let's go back to another daily chart that I've got out here. You're familiar with this one. Let's pull this back up on the screen. This is the one that showed the breakout of the consolidation area, that 265-point breakout. Gold broke through that back in April of 2013, and that gave you a price projection of gold down into about the 1270 area. Right now you're trading at 1291. Now, what gold also did this morning, it made a 1 to 1.272, A to B equals CD down. That was in the 1293 area. It's trading at 1292 right now, so we know that you've got two patterns here completing in this range. You've got that little smaller butterfly expansion pattern. You've got a 1 to 1.272. If this area here fails, I mentioned that the butterfly the smaller butterfly would turn into a larger butterfly out there, and so you'd be looking at about the 12. So you're looking, the ranges are 1227. That's the swing point going back to December 2009. 1270. Completes a 265-point consolidation. Remember, when you break a consolidation area, your move is going to typically be equal to or greater than that actual move. So I'm going to say the 1270, if this area here doesn't hold, 1227 becomes next. Then you've got the 1 to 1.618, A to B equals CD down. That takes you to 1155. So at 1155, you've got that 1 to 1.618. That makes a lot of sense. Remember, we took a look at the monthly chart out here for gold, and the monthly chart said you've got also at 1155-ish, you have a nice 0.618 Gartley buy pattern. So that might be the place to be paying attention to. So we'll just simply have to watch that. How about in high-ho silver? What is that doing here this morning? You've got silver right now trading out at 1982. It's broken through that little 1.618 smaller butterfly that held as a support area. You expect it to when you see those type of Fibonacci numbers show up on your screen here. We took a look. This is the weekly chart we're looking at. This had all those small-bodied candles. Tell you there's not much oomph in one direction. In this case here, there was no oomph in the other side, in the upward move of the direction. In fact, what we just saw after the doji-type candle on May 24th, we just simply continue to see leaves fall off the tree. Now we're seeing the tree get cut in half, and that is going to send silver, or should send silver, down to about the 1735-ish area, where that will go ahead and set up a nice 0.786 Gartley buy. Does that mean you buy it right then and there? Absolutely, positively not. You do not do that. You wait for some type of reversal signal. Remember, we're utilizing these techniques here to give us the ranges, much like we did as we were waiting to find short positions inside the marketplace on the last bounces, inside, whether it be the S&P, the NDX, whatever it was that you were looking to short, because it was the soup du jour was any choice out there. It could have been the Dow, could have been anything out here. So we're waiting for the patterns to complete, and that's the same thing that we're looking for here in silver. If we go take a look at light sweet crude right now, that too getting the kibosh. Nothing here is safe other than the king dollar. If we take a look at light sweet crude, looks like today it's trading down at 95.67. We're going to find out here shortly if this was a false break topside, meaning that in the case of light sweet crude, it would get back inside this long-term descending price channel that takes you all the way back to the highs in 2008. Remember when light sweet crude was up at the 147 level? Of course, it was making a nice drive to a top pattern out there as it was completing that. So we'll see here if light sweet crude is going to get back inside the price channel. It looks to me like it will. It looks to me like it was a false break topside, but we'll see. How about bonds here? Bonds got smoked this morning. And this is a weekly chart that we've got up on our screen here. The weekly chart is absolutely in a downtrend. What bonds have done on the weekly chart is they're just below the 1-to-1. A to B equals CD down. They are below that 0.382 retracement level. What has held bonds in check here right now is the 200-period exponential moving average on the weekly chart. So that's the low that was hit here this morning. We'll see if that holds. If it doesn't hold, you're looking at about the 130.24 level. That'll set up in. And actually, if you take a look at this weekly chart, that's really what it's communicating to us, big time. So even now, we've got the markets moving down. We've got bonds are not the safe haven. So there is no safe haven out here. We'll see if if that changes. But if you take a look at this C to D move out here, take a look at A to B was a pretty decent move, pretty decent straight line move coming off of that November 16th high all the way down to the low that was put in on March 8th. But if you take a look at this, is a weekly chart that we're looking at. Take a look at that C to D move. Look at how this price here is inside the left-hand side. That means, and the angle that I'm using here on my charts, folks, the angle here for the C to D move is the exact same angle as A to B. And it has a lot of meaning. You want to make sure that you are maintaining that same angle, because if price is on the right-hand side, in this case here in a downward move, it tells you that it's weakening. When it's on the inside track there, it's telling you that it's actually strengthening on the way down. That's why it says to me the 1 to 1.272, but more likely just simply moving down to the 0.618 level is where it's headed to. Does it have to get there on this move? Not necessarily, but is that where it's headed to? The weekly charts say absolutely it is. Now, let's take a look at the King. Let's go see what King Dollar is doing. Then we'll take a look at the other currencies here. Clearly off of the bottom yesterday as it got down to that, it got below the 0.618 retracement of its low that took place on February the 1st all the way to the high that was put in on May 23rd. Now, if we take a look at where it'll move to, well, the U.S. dollar index should move at least to the 0.618 retracement level, right? And that's the expectation. You can see what the U.S. dollar index has done. Got to the 0.382 level. Maybe it backs off here. Lets a few folks off of the elevator on the rise up to 83.03. Right now, it's trading out at 82.04. So what can that do? We can expect more pressure on the commodities, right? You can expect more pressure on gold, silver, and oil out there. And that's what it looks like. They finally, it has given up its ghost out there. Let's see, let's go take a look at the other currency pairs here. We did take a look at the Euro Japanese yen. Let's go take a look at the Euro US dollar. Euro US dollar, as well as the pound out there, Great British Pound. It set up those nice 0.618 Gartley sell patterns. Well, that certainly is now making its first move down. So the first move down is going to be the 0.382 retracement level, down just a bit further, around 1.3158. That'll be the first move. Expect maybe from there a little bit of a bounce or move sideways before the euro heads all the way down to the 130 even Steven level. And if you continue to get wide-ranging bars all the way down there, what this actually could be doing is setting up a long-term A to B equals CD. You see, a Gartley pattern, what the ultimate of a Gartley pattern does is it creates the actual next C point of the A to B equals CD down. Inside the euro, your A point would be all the way up here at the 137 level, your February 1st high out there. Let's just, for the heck of it, let's draw this pattern in here. Your B point all the way down to April the 4th, and then your C point is all the way up here at June the 18th. I'm going to have to back this off a bit here. That says 1-to-1 inside the euro. This would be the ultimate objective of any Gartley pattern, would be that the sell point on the D, this would be a Gartley sell, that sell point turns out to be your C point of the larger A to B equals CD down. That takes you into 1.2449. That is logical, because if we take a look at retracements now from the lows out here in July of 2012 all the way up to the high that was put in on February 1st, what you will see is the 0.786 retracement is right just a tad below where that 1-to-1 A to B equals CD. So that looks like the pattern that is setting up inside the Queen out there. That will put some big energy into the U.S. dollar index for sure. Let's see. So we've gotten the currency pairs. What have we? I think we've pretty much covered. Well, what we haven't done is we have not gone down to the intraday chart. So let's go into the intraday charts here, because this will help us. So we'll take a look at the intraday charts as well as the euro yen, just to try to get some type of feel. So right now we're seeing a little bit of a stage. Now, as you take a look at these markets here, clearly in a very oversold territory here. In fact, all night, it's been an oversold territory ever since Uncle Ben, really kicked things off at 2 o'clock, 2:30, 3 o'clock. Yesterday, and each bounce has been met with nothing but selling out here. So now the key is going to be waiting for some type of reversal candle. We haven't seen it here yet. This bigger candle that I had out here, this down thrust coming into 6 a.m., you pay attention to the bodies of these candles, because you want to watch for price trading with inside those areas as soon as, just like we were watching on gold, really. Now, in the case of gold, we were looking at the entire bar. So you can look at the entire bar. I like to use the body. As soon as you break the body, either to the upside or the downside, it gives you momentum, and that's what we saw here on the 30-minute chart inside the ES Mini. If it ended like that candle right there right now, that would be a hammer, and at least you would know where the bulls are taking their position out here in the marketplace. So remember, this is going to be a market where we're going to see bounces. My suggestion is just simply get all that gunpowder ready and identify the areas where you want to go ahead and take positions to the downside, because the trend is your friend. So go ahead and just simply wait, be patient, and then jump on board, because I guarantee you there are going to be plenty of others jumping on board that freight train all the way downtown. Now, that's the 30-minute chart. Let's take a look at the 120-minute chart out here. In the 120-minute chart, just like we were talking about inside light sweet crude, how that had a false breakout of its descending price channel. Obviously, this is much shorter term time frame. Inside the S&P futures, it is the 120-minute chart. Nonetheless, it still was a downtrend price channel out there. We did see the break of it. That's what led us to the belief that we were going to see those patterns inside the ETFs, inside the indexes form. Those were the Gartley sell patterns out there. So breaking this channel, and coming back and testing it was what gave us that indication out there. Now what we saw yesterday was we saw a break back inside it. That took place after the futures market opened back up last night. Now what we have seen is we've seen from the low that was put in at June 13th at 3:30 in the morning, that price level being 1591.75, all the way up to the high that was put in here on Tuesday's session out at about 7:30 in the morning, up at a level of 1649 out there. Let me see, that was yesterday's session. My apology. At 1649, you can see the sweet 618 level has been hit out here, but it's still in a confirmed downtrend out here. Now, what happens inside these price channels when you break back in? Well, guess what? You go back and you can visit now the bottom. And where is the bottom of the price channel? You know, the easiest way to do this is just take a look at expansions of swing points. So that's going to require, right, if we're going to see this get down to the bottom of its price channel, number one, it's going to require making a 100% move of a move. That's going to take the ES Mini down into that 1591-ish level. Expect that to be an area where if this area here does not hold, that should hold out there. And then we'll see the expansion all the way down to the bottom of the price channel. Probably the 1.272 expansion is around 1576, so that is most certainly in the cards. Will it be straight line move? No. Now, question for you. If, in fact, we see a bounce unfold, where is that bounce likely to take you to? If you're watching us on Tiger TV, if you're taking a look at the charts, where is the area that you would think of, that you would look at inside this chart, where that bounce would likely take you to? Because would that be a good area for you maybe to take a look at? Where is it that you would go ahead and take a short position in the market? Something to think about. When we get back from the break, I'll go ahead and answer that from my thoughts, but you look at that chart. Where do you think that next sell position would be? 877-927-6648. Dow's off 134. S&P's down 14. We'll be right back, folks.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow's off 144 right now. S&P still down 14. And the answer to the question, the best answer I can come up with, which is trying to identify, where's the next potential target to add to shorts on a bounce out here. And that's really taking a look at the top of the descending price channel out there. Doesn't have to get back up there, but if we did see a bounce, a dead cat bounce, based on the high off of yesterday's high down to the low that we've seen here thus far this morning, a normal bounce that you would get would be a dead cat bounce, 0.382. That would be 16.19 and change out there. So that's about the range that I would be looking for as a potential sell area on any bounce. Now, it's going to have to be adjusted if the market continues to push lower throughout the day. What I would look at is from the swing point high, which in this case here is going to be 1649. Maybe you don't pay attention to the futures. That's okay, or certainly a 120-minute chart. You can do the math. Just simply take 1649, go figure out where the intraday low was put in today on the ES Mini, on the S&P futures out there, and take that difference and just figure out where the 0.3, take 38.2% of that, add it to the low, and that'll give you your target range for where you could take a look at the next possible sell inside the ES Mini out here. But, I don't think you need to chase it. I think you're going to have plenty of opportunities because, what I'm looking for, look, it's not what I'm looking for. If you just simply go study the chart patterns out there, and I suggest that you do it, the easy way is if you go to the homepage of TFNN.com, you can check out my special report that the trend is your friend until it changes. But inside there, more importantly, there's a link that allows you to test drive my newsletter service for a couple of weeks for free. And that includes, folks, over 40 hours worth of education in there. That's video education. And so there are workshops there that take a look. I did a workshop that specifically took a look at the 6-month unfavorable and favorable seasonal cycle out there. So it gives you all kinds of information that helps you to identify not what I think is going to happen, but just simply if you go back and you take a look at the charts, what has happened. You know, if you believe that patterns repeat, which we know when we trade these markets out here, they absolutely do, because we're looking for those patterns. That's the whole key, is that we are looking for patterns out here, and whether they're price channels, whether they're AB equals CD, whether they're Fibonacci expansions, it may sound complicated, but all you need to do is just focus on one element at a time, and the element you could start with is just simply trying to understand when you see changes in trends in the marketplace. So go over to the homepage of TFNN.com. Do yourself a favor out there, and let me give you that gift. Let's see. I know there was something. I wanted to go take a look at before we get off the air here during this show. We didn't take a look at the markets around the world, and I did mention that in the FTSE in the UK was kind of melting down because up against this little hammer candle that was created on June the 13th, that low 6205.71. You're at 6198.53 right now. So it's going to be important. We'll pay attention to the close. Well, I won't be able to, but you'll be able to catch that during Basil's show today, or just take a look. I think it's 11:30 in the summertime when the FTSE closes, and the FTSE closes below 6205.71. Well, first, whether it closes below it or not, this is a nasty-looking chart out here, because it's really been a straight 10% move on the way down. There has not been any kind of bounce inside this. It's trading below not just that hammer candle, below the 200-period exponential moving average. If you go from its November lows out here all the way up to the high that was put in, so it's already given back 10%. It's done it since May 22nd. So you think maybe that's kind of an indication of what things are to come for us as well. The 0.618 retracement level is down around 60.90. But with this type of a move here, it almost looks to me like it's going back to November 16th. Folks, it is Terrific Tuesday. Thanks so much for joining us. Always remember, you have an amazing power within yourself, and that power is so strong that it'll create a life of abundance, cure incurable diseases, build billion-dollar businesses, paint magnificent masterpieces. But most of all, folks, create fantastic, loving families. Thanks so much for being a part of the TFNN family. Have a great Thursday, folks. Hi, folks. I'm Steve Rhodes with TFNN.com, and the trend is your friend until it changes. A free special report is now available on the homepage of TFNN.com, and if you have money in the markets, this free report is a must. If your strategy is buy and hold, this report is a must. If you're a day trader, a swing trader, a Forex or options trader, or just getting into the markets, this report is a must. And it's the second best gift you'll ever receive. Look, if you buy a stock and the general market is trending in the other direction, you've reduced your odds of buying at the right time by 70%. Instead, let me teach you how to get that 70% advantage plus. The plus is a free trial to my daily newsletter service, Mastering Probability. There's no upfront deposit, no charge to your credit card, and I compress decades of education into each daily newsletter. This is a limited time offer, so act now, and I'll teach you how to take the trend and turn it into your best friend. All the details are on the homepage of TFNN.com. Act now.